Wall Street is a battlefield where two beasts have been locked in a deadly struggle for 3 centuries. You've been taught a simple story. Bulls mean buying, bears mean selling. But the origin of these symbols is far darker than anything a price chart can show. It began with blood sports, illegal skin trading, and a financial bubble that even ruined Isaac Newton. To understand the market, you must first understand the beast. The bull came to represent buyers because it attacks upward, driving its horns from below, a motion long associated with rising prices. The bear represents sellers because it strikes downward, dragging its prey to the ground, a symbol of falling markets. Bulls versus bears, the bloody origin of Wall Street's eternal war. But how did the duel between bull and bear begin? Long before stock charts, long before trading floors, Europe had already turned animals into symbols of violence and spectacle. In the 18th century, animal fights were a common form of entertainment in Europe, especially in England, where dog fights and cockfights drew large crowds. Among these brutal practices, one stood out: the bull and bear fight, in which both animals were tied and forced to battle until one collapsed. This cruel custom crossed the Atlantic and reached the United States, which at the time were still British colonies. This flyer, for example, advertised a fight between a panther and a bear, preceded by a cockfight as the opening act. Surprisingly, many spectators attended these events right after Sunday church services. According to historians, bull and bear fights were deeply unequal. In most cases, the bull was killed. The bear's sharp claws and powerful bites tore its opponent apart, making death slow and extremely painful. In California, these spectacles even had bleachers built for women and children. With the gold rush in the 19th century, new prospectors considered these fights barbaric and distasteful, which eventually led to their prohibition. The bear exited the arena, but the bull did not. In Spain and Portugal, bullfighting drew massive crowds until it was later banned. But where does the association between the bear and selling come from? The earliest known record appears in a British magazine from 1709. The magazine was called The Tatler, and it warned that it was unwise to sell a bear's skin before the bear had been caught. This saying referred to the bearskin jobber, a trader who sold a bear's skin before actually hunting the bear, often raising the price at delivery. Bearskin jobbers had a poor reputation because they sold something they did not yet own, a practice now known in financial markets as short selling. The term became widespread around 1720, when a massive bubble shook London. The South Sea Company, which held the monopoly on transporting enslaved people to the Americas, relied on Spanish colonial ports for its operations. A diplomatic conflict between England and Spain disrupted access to those ports, causing the company's collapse. Share prices crashed, triggering widespread financial ruin. Among those who lost fortunes was Isaac Newton, one of the greatest minds in human history. Those who profited most from the crash were short sellers. Over time, bearskin jobber was shortened to bear, becoming associated with those who profit from falling prices. The term bull emerged in the early 19th century. At the London Stock Exchange, clerks filled out bulletins whenever prices rose sharply. Eventually, bulletin was shortened to bull, linking the term to rising markets. However, The bull truly became the symbol of market optimism in the 19th century, thanks to the American magazine Puck. Published in the United States, Puck was famous for its political satire and sharp critiques of global power. Its illustrations cemented the association between bulls and rising markets. In one issue, Puck portrayed J.P. Morgan as a massive bull blowing bubbles. Those bubbles symbolized the soaring share prices of his companies, eagerly chased by investors willing to pay ever higher prices. Notably, the magazine depicted Morgan with his tail tied, a clear critique of his immense economic power and political entanglements. In another illustration, a bear appears as a gladiator defeating a bull, symbolizing panic and sharp market crashes, events that repeated throughout the early 20th century. In yet another edition, a bull and a bear pull a sled labeled Wall Street. On top of it, a railroad worker throws a child to a dog. The child symbolized overvalued railroad stocks, while the dog represented President Theodore Roosevelt, attempting to rein in excesses and abuses. In another satire, a razor-shaped seesaw slices through investors' heads. Balanced atop the blade are a bull and a bear carrying sacks of money. Inscribed on the razor, this indicator rises and falls with stocks. The image symbolized brutal market volatility and how lethal it could be for unprepared investors. In the upper left corner appears the entrance of the New York Stock Exchange, where a group of lambs, symbolizing inexperienced investors, gathers at the door. Below them, a speculator calmly watches a stock ticker, indifferent to the carnage. In the upper right corner stands Jim Keane, one of the greatest traders of the era and a famous collector of purebred horses. Over time, the imagery of bulls and bears escaped the canvas and stepped into the real world. Out of paintings, into streets, into bronze. Across continents, cities began to carve the same story in metal. The bull charging forward, the bear striking down. Hope and fear, frozen in place. But one sculpture stood above all the rest. The Charging Bull of Wall Street. In 1989, under the cover of night, an artist arrived with a truck. No permission, no announcement. He unloaded 3 tons of bronze, right in front of the stock exchange, and disappeared. By morning, the police tried to remove it, but it was too late. The crowd had already chosen. The bull had become a symbol, not just of strength, but of belief. If you invest for the long term, you learn to trust the bull. If you chase the short term, you quickly meet the bear. And sooner or later, everyone meets both. The market doesn't care if you're a bull or a bear. It only cares if you're still standing when the dust settles. Long before numbers were written on walls, before paper carried prices, before bells opened the exchange, humans were already watching bulls and bears. And the market is still the same arena. This story doesn't end here. It continues in the next market, in the next empire, in the next arena. Go deeper into this session. The full research notes are available below.